Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here. Hope you're having a phenomenal day. We're taking a very quick look here at Bitcoin. It's extremely important you pay attention to this because we have a negative ETF inflow here recently. That was roughly 2 days ago, of course. This is always a bit of a lag for the ETF inflow, but the general consensus here is that when that's negative, we see a shift in momentum, or it's a manipulative power of three trade setup we've seen here recently. I'll discuss more about that here in a minute. The key takeaway is that we're going to look at Fear and Greed Index as well as Altcoin Season Index, kind of help understand what that means. In the overall sense here and where we're at with Bitcoin dominance or altcoin dominance respectively, right? We are testing this trend line right now. Decent chance we break through that. Altcoins could continue to surge, but for right now it's holding strong and we're seeing altcoins kind of suffer so far today. So we'll take a look at that and much more. If you're new to the channel, welcome aboard. Hope you can learn something today. If you want to become a better trader, cryptocash.tech is a site, link down below. We'll go ahead and get started here for you. So quickly to note, let's go ahead and jump into, let's do this back end first stuff here. Make sure we understand what's going on with the market overview. So to quickly understand ETF inflows, let's discuss that really quick. We got a negative 131 million for Bitcoin. That was roughly 2 trading days ago, right? So that's basically when the market opened back up again on Sunday. Obviously it's a weekend type of trading, but for the most part at this point, when things are negative, we generally see a shift in momentum tentatively. Now it's not a guarantee, of course, but we look back here at June 30th, we can see June 30th was roughly a similar outflow for Bitcoin, obviously a little bit more. So let's go and take a quick look at June 30th so you understand what that looks like. And if you recall, that was when we had our last manipulative power of 3 waves set up before the price continued to surge, right? So I'm not proposing we're just going to see the price go down or straight up from here. The likelihood of it going higher is still greater based on this bullish pennant pattern breakout. But what I'm getting at here is we had our accumulation phase. We have our manipulation phase. This is June 30th, by the way, right in this guy here. And then the price rips up and then took off from there. Okay, so it was trapping late shorts, basically. That's the concept there. Anyone who broke below that trend line took a short, price comes up, rips those late shorts, and the price goes out of control from there. Now, just because that happened in the past doesn't mean it's going to happen again, but that's just an identification of how things occurred when we saw a significant ETF outflow. Okay, so just some things to kind of be aware of there. Let's quickly recognize too as well, Fear and Greed Index, while we're in the 60s or 70s, generally speaking, the price of Bitcoin will go sideways and inevitably take off from there once the greed index pulls back. So what we're hoping for is the price to continue to maintain this range. Fear and Greed Index continues to taper off, and then we go higher from here. This is not an exact science, but it does work similar to the RSI, which is Relative Strength Index. If you're not familiar, extremely important indicator that works well on all time frames. To quickly note, altcoin season index, so we can see 51 is the current number, down from 55 yesterday. So we can see altcoins taking somewhat of a hit. Obviously, we have some top performers, but majority of altcoins that are above Bitcoin are those the ones you want to kind of consider paying attention to. So I definitely recommend at this point the coins that we generally cover on this channel. Those are probably ones you want to maybe consider more so trading versus just some random coin. Stick to the top 100. I think it's usually a good strategy there. But all things considered here, we can see that we're starting to taper off here with altcoin market cap. It's starting to pull back there from that resistance locally at about 1.6 trillion. So let's take a look here at the regular data here, kind of see what's going on after jumping into liquidation data first, and then kind of see where we're at, because liquidation is a good baseline if you're not familiar with understanding the back-end data and where people are hedged the most. So if we have a lot of liquidation really close to the price action, there's more propensity for the price to go in that direction because market makers really love manipulating the price. If we take a look here previously, the price came down as low as about 116.5. There was an aggressive candle wick. This happened last night, and that came all the way down to 115.9. That was terrible for a lot of long holders because they just got swept out of their longs and the price turned around and went right back up. Have you ever had that feeling before? That's what it looks like on the back end here. So liquidation is an unfortunate thing, but it's super common, and it's all because people use high leverage. So don't be another statistic, use low leverage or none at all. You're going to be much better off, especially when you're learning to trade. All that being said, 120 to 123 is that upper range of liquidation here locally. From a macro perspective, if we look at this as kind of just an easier perspective, this is the 1 month on the right. We can see here that 121 has the heaviest concentration locally. And once more, that CME gap down below at 115 to 114 has some pretty heavy concentrations too. So that's kind of where we're at there. Liquidation short delta is still high, or it's tapering off rather, approaching break even, which can be a shift in momentum, but we're gonna need a lot of volume to punch through this $119,000 resistance. I'm not sure it's gonna happen just yet, even though we are breaking our descending trend line. It feels very much like a fake out. This feels like an early exit strategy for a lot of whales, but also just kind of a late trap there for longs. So unfortunately, that's kind of where we're at there. That's the name of the market right now, just destruction in both directions. Either way you look at it, open interest 118 to 118.7. Those are two heavy concentrations of open interest. That's where people are hedged the most. Okay, let's take a look at the daily time frame after. Let's go back to Bitcoin dominance, just so you understand a little bit more about this here. Just give you some perspective. We are testing this ascending trend line. While it's never exact, really depends on what time frame you use, but from a monthly perspective or a weekly perspective, we're really close to that ascending trend. And what this basically just means is as Bitcoin dominance continues to pull back, altcoins do well. But if we bounce from here, so to speak, we'll be seeing altcoins start to bleed out. A lot of alts are heavily inflated right now, so I wouldn't be surprised if we see capitulation for altcoins, where money flows from altcoins goes into Bitcoin. It explains a lot right now with Bitcoin dominance going up, that altcoins are essentially taking that market cap dominance, it's pulling back, it's going into Bitcoin, that typical cycle reaction there. So at this point here, if this continues to go up, then we're gonna see something along these lines, which basically just means that the price of, or Bitcoin dominance goes up and the price of Bitcoin goes up, then alts are gonna go down. That's the general consensus. That's kind of what we're looking at here. So it's just kind of an understanding there. If you want a copy of this, it's in my Discord in our education section. That is available for you here under our community tab. So it's in here. It's actually bookmarked, pinned across the top there. All right. I pinned that a few years ago. Okay, so other than that, that's kind of what we're looking at there. Let's go ahead and jump into regular charting here and kind of see where we're at, and just recognize the bullish type of pennant pattern we're seeing right now is still in play. I'm using candle wicks, so to speak, here. You can see it on smaller time frames a little easier, but the concept is that we're working ourselves into a slightly descending channel with lower highs and higher lows, and essentially that concept is that we're going to break to the upside because we originated from the downside. We're also building a lot of volume here in this range at 118. That's the most amount of volume, so that does help understand that we have sustainability. If we lose 118,000, we keep closing below that, it may be a different story, or once again, a manipulative path to the dark side. We can see here, speaking of which, is an early indication of shift in momentum. Keep in mind that isn't a guarantee, it's just a momentous indicator, but it does tell us that we may be working our way down because we haven't continued higher yet. But more importantly, the longer we spend in this range, the more likely we are to break up though too. That's how bullish rectangles break out. And there's more bullish patterns derived from ranging after you ascend first. So I think we're still in good shape. We can see money flow index is high. We are also below our moving average there, and stochastics pulling back. So we got a bit of a conflict here. This is typical behavior when the market does this here. So, it's hard to really kind of read into it, but the key takeaway is that, trading a breakout is generally unfavorable. While a lot of breakout traders have been fairly successful in the last couple of weeks, mainly because we got this FOMO thing going on right now, and everyone's just shut up and take my money. They're just flowing money into the market. The concept here is that once you start doing that now at the tentative top, you can get bit pretty hard. But at this point, we can see this descending type of trends getting tested. We have a local high of 119.3 working tentatively as that resistance level for us. But the overall sense here is that we're still in decent shape. The 4-hour time frame is letting us know we have good convergence, and in most cases there's a lot of positivity here, but we're compressing too much into a range, and we're going to see a breakout either up or down soon. That's the bottom line. Nobody truly knows. I can't propose to know or say that I know, but I can tell you back-end data is telling us here that we're starting to lose that momentum. We're starting to see that shift and that dynamic. So unless this is another fake out, which I wouldn't be surprised, the propensity for us to go higher is slightly greater, but it's too close of a margin to want to bet on it, right? So at this point, the best thing for you to do is consider range-bound trading. We're in a definitive range right now between roughly 120 and roughly 116. So that's the range right here, right? Up, down she goes. We'll just keep doing this until it changes. That's basically the concept. So you're better off ranging right now, or range-bound trading, and until we find a definitive breakout in either direction, I would say that's pretty much par for the course. It's the standard procedure. So hopefully that makes sense. I described it correctly. Thanks again so much for being an amazing part of my life. That's pretty much all we got here for you. You know who you are. You're awesome. You're greatly appreciated. Join us over at BitIndex too, folks, if you haven't yet. There's a couple days left of this promo, but we're going to have a new promotion next month as well with not volume rewards, but deposit bonus for next month. So we'll have that rolling. If you use my link to register, you're eligible for future competitions at all times. Last but not least, I do have a Twitter, Telegram, or Discord if you want to join us over there. Don't be a stranger. Feel free to reach out. Just know I'll never direct message you first. Scammers are the worst of the worst. They're going to try to hit you up consistently, posing that they are me. I'll never do that, okay? You can reach out to me, but I won't reach out to you. No offense, but it's just not the right thing to do. Okay, have a good one. We'll see you in the next one. Take care of yourself out there. Bye-bye for now.